Chennai.
Today, our banking sector is going through its most challenging phase. Operating in a highly automated, disruptive and customer-driven ecosystem, Indian bankers need to increasingly deal with a plethora of technological and regulatory factors apart from constantly facing competition from global and Indian players in the banking and fintech space. Therefore, it becomes significant to showcase the kind of changes in the Indian banking system and how the different stakeholders are all playing their part in creating a robust and agile banking system. This is the reason CNBC TV 18 has partnered with Bank of Baroda to launch Financing the Future, a 7-part in-studio panel discussion series in association with Cinema Vision India. This is the first discussion of the series on the Bank of Baroda, the first three-way bank merger and the synergies therein.
The amalgamation of Vijaya and Dena Bank with Bank of Baroda may go down in management history as one of the smoothest ever mergers. Not a ripple from vendors, employees, customers, just any of the parties involved. What is the secret mantra of this merger? We need to know that also because the government is planning consolidation of many of the other public sector banks as well. Therefore, what should be the consideration while looking for consolidation among banks? How should employees and processes and personnel be prepared for a merger? And post-merger, how do you go about smoothing and integrating people and processes? To understand the key lessons from this merger, which is going to be iconic in a sense, I have with me 3 people who were intimately involved with Bank of Baroda and the other banks, both pre and post-merger. I have with me Mr. PS Jayakumar, Managing Director, Bank of Baroda, Janamjeya Sinha of Boston Consulting Group, and I have with me Shri Panda, Additional Secretary in the Ministry of Finance and member on the board of Bank of Baroda. Gentlemen, thank you very much for joining me.
Thank you.
Well, Mr. Jayakumar, let us start with the present rather than the past. Now that you have been there, done that, if the government were to ask you what should be the consideration when you look at consolidation, what should it be? What kind of banks should you be looking at? IT systems? Should you be looking at culture? Should you be looking at geography? What should be the considerations for a merger?
Well, I can talk about what has helped us, and that could be some kind of a marker to the whole thing. I think to some extent, the geographic overlap was positive, the technology was positive, but not to underestimate the cultural factors as well. There's a fair degree of commonality between all the 3 organizations. And more important, I think both Dena Bank and Vijaya Bank saw a significant benefit coming from the merger, which could be manifested in different forms. For example, better geographic opportunity, better career opportunity in terms of depth, to some extent, improved compensation structure, if you will, an ability to go to a platform with improved technology. And for us, from those of us in Bank of Baroda, when we saw it, we said, okay, it gives us a great opportunity to get access to markets that we're not present, particularly
So
Karnataka.
all of you all found something
Yes, that's very critical. So then when you then look back at it, you say, yes, it is good for me to do it. And I think a priori, the sense of benefit to the stakeholders must be fairly clear. And I think the same thing is true about our customers when we talk to them.
Yeah.
It is same true if you were to ask Mr. Shri Panda as the stakeholder as to what he thinks about it. I think all of that comes together.
Okay, of course, all 3 parties should find it beneficial. Actually, let me come to you, Mr. Sinha, on that. What is the critical factor? Is it someone like Jayakumar? I mean, a key management personnel who is able to pull it off. What pulls off a merger so smoothly as this one?
So there are 2 different parts. First, I will say there has to be policy coherence and policy execution. There was policy coherence around the need for consolidation of public sector banks, even from Narasimham Committee, right?
Yes.
And then again in 2004 and 5, it came up. I will give credit to this government in being able to execute on the basis of policy coherence. The second thing I will say is that when you are trying to put a merger of this kind together, the government took a risk. they did 3 banks at the same time. You know, globally, if you look at it, I can't name 3 banks being merged at the same time. It's not common, and it was, and so I will say that when you are trying to put 3 banks together at the same time, there are 3 or 4 things which become very important. I will say the leadership becomes very important. It is critical that there is good preparation. It is critical that there is good support from the government, because you know any of these things can be disruptive. And when you go for an operation, if you have any relative being operated, when the doctor comes out and if they say the surgery was uneventful, you are really relieved. When a 3 bank merger takes place and you can say it was uneventful, it is great.
It's great.
Because the unions were not restive, the customers kept, seemed to be fine. The media, was not critical. So it gives confidence. So I will say that there was in the preparatory phase, I would give credit to the government actually. In the implementation phase, I would give a lot of credit to Jayakumar and his team.
Okay.
No, actually, I would say, add to the point that prior to the announcement of this amalgamation, there was a fair amount of working between us and the government. There were sharp questions from them, and then we did our own analysis and then submitted the data back. So I think the point that Janamjeya is making, it has to be a very thoughtful exercise, was certainly the case in this particular time.
Sharp questions from the government. Mr. Panda, what were the government's worries with respect to this amalgamation, and more importantly, what has it taken home which it can apply in the future?
See, for the government, the worry was obviously the HR issues. So we wanted a policy where there would be no job losses. Number 2, none of the employees of any of the banks would feel that they would be in a position of disadvantage. That also has been taken care of. The best of 3 is what they call is being given in terms of pay, perks, etc. No employee should be discriminated in terms of he's an employee from the surviving entity, whereas we are the merged entity. So all that has been taken care of, and I see that the employees are very much happy because they see their enhanced growth potential also in the company now, more of international exposure, and plus also the promotional avenues and opportunities. You already know that there are several posts of chief general manager coordination which has come up, which is between the level of the ED and the GM. And in future and in times to come, I think they'll have still better opportunity. That was one thing. And second concern was, of course, the minimum disruption. No disruption, if at all it happens, minimum disruption as far as the customers are concerned.
Absolutely.
So I think more or less the entire exercise, which was a challenging one, this journey has been very seamlessly executed, and I think it was the strong leadership and the determination of the government that it should go through, and of course the leadership in the banking system also, and by the CEO and the MD.
Mr. Jayakumar, first, how did you manage the organizational changes in terms of fitting people, or in terms of I don't want branches here but I want branches here? What were the organizational steps you went through?
I think the government has a policy role and we have an implementation role, and I think we all had enough time to prepare. From the time the announcement was made and the actual date in which the merger came into effect, the amalgamation came into effect. So during this period, we did a number of things. For example, we set up groups of people that would involve representatives from all the 3 banks to look at each of the product or process and then suggest what is a go-through process. We had groups of people working together and say, what is my new business plan? There were a group of people talking about how to get the HR policies brought together. There was a group of people thinking around, which regional offices. So the effort was collective, it was distributed, but the 4 or 5 months time. And one must also not underestimate the role that the 2 CEOs of Dena and Vijaya Bank played in this role, in terms of being able to communicate the broader message and being a source of assurance, and then also helping us in the way the future has to be rolled out by giving the right kind of advice with respect to people, process, their culture, and everything else. So when you have everybody working together in a coordinated way with a common purpose, these things happen. And to some extent, I would say back to again from a DFS perspective, they were fairly clear in the beginning itself that, listen, this is important. All of you are going to have continuing stake in the financial system, regardless of which institution you go through. And it is a merger of equal, so everybody is going to be better off than before. And let's all work together collectively to make sure this succeeds. And therefore, the tone was set in the top and then executed down below.
6 months after the merger, were there more transfers that you had to do because some places were overstaffed?
So what we did was, in the first 3 months, we decided we'll complete the planning exercise, communicate the planning exercise, and then make the transfers.
Okay.
So it was all done in I wouldn't say not in a hurried manner. There was enough time to communicate and discuss each of these aspects before they actually got executed. The other thing is the amount of energy that went around in terms of the number of town halls we held, the number of meetings we had. It was very detailed. So we do have transfers, we do have consolidation, we're going to continue to have that, but it is non-disruptive because it's thought.
One big advantage I think the banking system, the public sector banks have at this point in time is that there was a missing middle. So, there was no need to have surplus, there was no possibility perhaps of excess staff and therefore retrenchment. That perhaps was an incidental factor that seems to have helped.
On the contrary, it turned out to be a benefit because we were, as we keep talking about, the issue of depth and breadth as a consequence of the amalgamation. The breadth because of the distribution we had, but depth also because now we were able to communicate and staff our organization better. Previously, we used to have a corporate bank in Bank of Baroda which had one person facing the market. When we got together, we said, okay, we have somebody who can work only with respect to the financial institution, somebody could work only with the public sector undertaking, somebody could only work with the private sector, or even the MSME was divided into multiple segments. And because of the thin share we had, we suddenly found the benefit of having more general managers. And so, end of the day, we don't feel we're running a superfluous organization or an excess organization, but rather a more determined one.
Okay. We have to take a break on that note, but when we come back, what are the other lessons from this? What kind of synergies? What has one bank learned from another bank? All those questions in a minute after this break. Welcome back to this interesting analysis that we have been doing with the top brass of the now merged Bank of Baroda on what were the lessons they have got from the integration of Vijaya Bank and Dena Bank into Bank of Baroda. I've been speaking with the Managing Director Jayakumar, with member of the board and additional secretary Mr. D Panda, and Janamjeya Sinha of BCG. Let me begin now with you, Mr. Sinha. There will always be branch rationalization that will have to be done. There will always be lessons that Vijaya taught Dena or Dena and Vijaya taught BOB. So, as an observer of the process, what have you picked up as lessons for the future, for the next merger?
See, firstly, when something is uneventful, it doesn't mean it is either easy or that it will be easily replicable. I just want to make that clear because we shouldn't be lulled into a false sense of confidence. In this merger, I will actually say that all the three MDs were very supportive. Of course, Jayakumar had to lead, but the other two were not disruptive, which is quite helpful. So I think Bank of Baroda found that in HRMS, in the HR system, the PeopleSoft of Vijaya Bank was superior to one that they had. So they took it. Okay. Now, the moment you do things like this, everyone feels, in a sense, respected. It's not that we are just being merged, we are being acquired, but that we are being merged and the best in class is being picked up, which gives people all hope. When the appointments were made, members from different banks were given important positions. So then people feel that there is hope. And of course, Bank of Baroda was the bigger bank. It had an international footprint. You had then opportunities to be posted in different parts of the world. You had a better client set to serve. So, there was a huge opportunity for growth for all the participating banks and the employees. But the mergers fail due to lack of communication. And in this one, there was a very excessive level of communication at the start, which almost seemed a bit disruptive, but it was actually required. Surveys were conducted, employee morale was checked on an ongoing basis to feel that if there are small hitches that were taking place, that they could be addressed immediately. Okay. And so that whole process was actually run, in an ongoing basis with weekly reviews, with town halls, with newsletters, so that employees knew what was going on.
When the government contemplates the next merger, what kind of feedback would you give them? How would you do it differently?
Well, I think it's been a great learning experience, and as Mr. Sinha just mentioned, we are in the middle of the journey now, so we have to cover a lot of ground, and so there is no room for being complacent at this point of time. We have to do the technology integration, which is again a big challenge, and plus how do we now grow, which is the whole crux of the matter is that if you have a bigger, stronger and a robust bank, then we need to grow. We need to have more banking penetration. We have to have a renewed or a revised business plan. And of course, we cannot forget that we have a responsibility towards the society also. So that aspect also has to be kept, in the back of our mind. And with this merger, the spread has happened, both length, breadth and depth wise. So now how we can leverage that and reach out to the last mile citizen who expects the banking services or the financial services. So that will be kept in mind as and when a decision of that nature is taken.
What would your advice be, Mr. Sinha, if objectively you were asked, merge more banks with the UK?
I would, if I was to be very objective and be politically incorrect, I believe that there should be, three or four maximum nationalized banks which should be large, and then we should have the government as the single largest owner, in my view, not with more than 50%.
Okay. Mr. Jayakumar, I have some nitty-gritty questions for you. For instance, how did you deal with third-party vendors? They would have a relation with, say, Dena or Vijaya. How did you manage them?
The nitty-gritty is fairly straightforward. Look at all the options, then look what is best, and then go ahead and take what is the best out of them. Okay. So in many cases, we found the vendors were the similar, but in one place we were doing it better as a process, or we were paying lesser price as a process, so we could quickly harmonize those. But as Mr. Panda rightly pointed out, we are still at the very early stages of getting things done, and we should not be complacent or over carried with this. We have a lot of things to get executed and is continuing to execute. This is a couple of years of journey, at the end of which we can really say, yes, we have done our job thoroughly, and then people are looking back and not thinking of themselves as having come from this bank or that bank, and think of themselves as being part of a more unified institution.
IT integration is complete?
It is working. It's a work in progress, but we've done a few things quickly. One is that the common services that are required by the customers are now available at all the branches. In fact, our IT team worked hard that we were ready on 1st April. But then we ran it out, we kind of tested it out with our employees for a period of a month and a half, and then announced it. So that is one thing we have done. The second thing is, the IT integration itself is a long journey process. So a shorter form of doing that was to say that we'll bring into each of the branches the core banking system of all three. Okay. And then get the customers to move to the surviving core banking system. Okay. So it's like you're having one SIM card, now I'm giving you another one, and at some point of time you start using the new SIM card and you start dropping the old one or even close the old one. So the idea is that this technology and the program and the coding and all of that stuff will take time, but what we can do very quickly is to get to the branches that constitute, say, 80% of a business, the ability to access all systems, and when the customers come in, you can migrate them to the surviving system. Okay. So that's the process we are following, and so I think end of this month, all our corporate banking would work out of customers would work out of one system and process, one office or in the same location. We've already done that with Treasury. So I think that's really the approach, that you have to come with some innovative solution as opposed to waiting for the integration to happen in its logical course.
What do you think you didn't do correctly?
Difficult to say at this point of time. Sometimes you think that you could have done better in getting better productivity and early growth. So the first 3 months, our growth has been fairly muted because a lot of time was spent around, getting people to be familiar with each other, getting new products to be learned because everything undergo some changes. So we kind of rest on that and say, okay, that it was not that good as it should be, but nonetheless, it's a starting period. Maybe the growth path can happen faster. That probably is
it is time well spent if it was spent only on understanding each other. Mr. Jayakumar, Mr. Sinha and Mr. Panda, thank you very much for joining me in this conversation.
Thank you very much.